All right, guys. So welcome to another ECB decision time, ECB meeting. Um, normally I would have said that this is not an important day, but this is actually a little bit different. Okay, we have this ECB meeting happening at a backdrop when the Greek issue has once again reared its head. What Greek issue am I talking about? The fact that you have an EU member country that is running out of funds that could potentially default, and you've got European officials, you've got a Troika running around trying to come up with money, okay, to pay themselves. Okay, so this is the backdrop in which we have our ECB meeting, which means that this is an important meeting because well, for me, I'd like to know if the ECB is preparing some sort of measure depending on what will happen on Friday, on what will happen middle of June. Okay, so among the things that we would like to hear from the ECB is it willing to go the extra mile? What do we mean by is the ECB willing to go the extra mile? Remember that the ECB is already doing its own version of money printing. Okay, they're already doing QE. Now, the question is if Greece is unable to pay its debt this month, um, thinking right now is Greece has enough cash to pay a loan about 300 million that will be due this Friday. But they've got to pay a total another 1.2 billion towards the middle of the month, and there's a big question mark. There's a big if whether they would actually have the cash to do that. If you've been listening to the news, among the things that has been raised over the last few days is the question of where will Greece get financing? Of course, the Greeks already have an ongoing funding program from the Troika. The problem, though, is that the Greeks have been unable to meet the requirements of its European partners. The problem, though, is that the austerity measures that the European creditors is asking the Greeks is such that it's political suicide for any Greek politician to say yes to any um, to any proposal by the Troika. Actually, at some point, the rest of the EU either have to kick Greece out of the Eurozone or they have to be willing to say, we can afford to write off 320 billion. Okay, so the Greeks owe something around 320 billion. The Greek economy is worth about 290 billion. So the choice for Greece's European partners is down the road. Are they going to say goodbye to 220 billion? Or how much of that 320 billion are they willing to say goodbye to? How much are they willing to eventually write off? Or are they going to say goodbye to Greece? And the Greeks come up with their own currency, come up with the drachma, revive the drachma. Okay, so those are the things that, well, that's really the final solution to the current problems that they're facing. Any money that the Greeks will get with this latest take it or leave it financing is basically just going to be a small amount, 7.2 billion, enough for the Greeks to have some money to spend to keep the country running. And then part of that money would, of course, be used to pay the creditors themselves. Now, guys, I don't know about you, but if you have to borrow money to pay for a debt that you owe, that sounds like that sounds like the first step to to a downward spiral. In fact, current estimate says that the Greeks would have to have austerity measures for the next half century, for the next 50 years, before the Greeks would be able to pay the debt that they owe. Okay, so I guess anyone, it would be absurd for anyone to believe that such a thing will happen. Austerity for 50 years. So either they kick Greece out of the Eurozone, or the European partners, the IMF, the EU, the Germans would be willing to write off a good chunk of the Greek debt. Otherwise, any solution that we get would be band-aid solutions. MRCC. Austerity means that you don't spend beyond your means. Austerity would probably mean that some social services would no longer be provided. Okay, maybe you go back to a very basic dental plan. Okay, maybe you don't get more procedures from government hospitals. Okay. Well, pan on fire. I think that if you talk about the rest of the Eurozone, well, regardless whatever happens, I would say that there's a lot of pressure for the euro to go down. For one, even if the Greeks would be kicked out of the euro area, okay, you still have the ECB with an ongoing quantitative easing program. They're still printing money. In fact, one of the questions that that Mario Draghi would be facing later is, okay, say that there's no funding for the Greeks. What if the Greeks are forced to default? Will the ECB lower its standards? Will it still allow Greek banks to borrow, use worthless bonds as collateral? Okay, so that's one of the things that Mario Draghi would have to answer later. And if he says, yes, we are prepared to lower our standards, then I think that's a quick, that's one reason for you to say you should be dumping your euro. Because the central bank is practically saying anyone who wants to have money will be given money if it drops its standards. If it doesn't drop its standards, then perhaps the euro holds where it is right now. But the question is for how long, given that you have this funding issue. Well, MRC, that's really the big question, isn't it? Where is the money going? Okay, when you have the Bund falling at a time when QE is happening. So I guess one of the answer to that is there is a discontinuity in the system. Money is not flowing where it should be flowing. So, okay, now as far as the interest rate decision itself, guys, we all know that there's nothing that's going to happen. Of course, in theory, the ECB could still cut, okay? Still go negative rates further. And if they were to do this, your classic response as a trader would be, okay, there's a rate cut, then let me just dump the currency that's involved. Let me just dump the euro. But like we said, we don't really expect any rate action. The focus will be on what kind of planning, what kind of contingency measures is the ECB preparing for Friday when the first deadline kicks in. I look at this chart and I'm thinking Friday could be a very terrible day for the markets. Let me open your euro. Now let's just think about this, guys. Friday, June 5 is what? First Friday of the month. Yeah, I would agree with you on that, Pan and Fire. Charts are confusing at the moment. Imagine this though. Friday is first Friday. And there's a lot of speculation that you're going to have a nice read in the US jobs market again. Friday is also one of the payment periods for the Greeks. They have to come up with about 320 million. That could be chump change for some countries. That could be chump change for some people. 320 would probably be chump change for someone like Bill Gates or Carlos Slim. But for Greece, they don't have it. So they have to have 320 million and pay their creditors. Now, the creditors themselves are coming up with a plan to lend the Greeks the money that they need so that the Greeks can pay the debt back to the creditors. So like we said earlier, if it were a person that's doing this, I would have, if someone were to borrow money from me in order to pay a debt that they have from me, I'd probably say, no, I'd probably say, do you think I'm crazy? You want me to lend you money so that you can pay me? And I think a lot of you guys would say, yeah, that's crazy. Anyway, that's what's happening. And this is really an exercise that the European officials are doing so that they won't be forced to call the Greeks in default. So what if by Friday the Greeks are unable to come up with 320 million? And then Friday you come up with a good read in your non-farm payrolls. Obviously, you know my bias for the euro. I'm thinking you get that kind of combination and you probably would be set for a quick run to your March lows in your euro. Now that would be the perfect trade for the week if such a thing were to happen. Unable to pay, a Greek inability to pay, and of course, good jobs figures for the US. Now, let's go back to later. So how do we trade this? Like we said, oh, by the way, guys, the focus will not be on the rate decision itself, but the focus will be on the press conference that follows 45 minutes after the rate decision. Okay? So if the ECB says, yes, we have contingency measures. Yes, we're willing to accept lower quality collateral. We're willing to allow Greek banks access to liquidity despite the government probably going in default, or despite the government going in default. That tells us the quality of ECB assets would be eroded. And if the quality of ECB assets are eroded, I wouldn't really trust the ECB that much. And as far as the currencies go, I would be worried about the value of your euro under those conditions. If they say, no, we're not going to do anything that would lower the quality of our assets, if the ECB says, no, we don't have that kind of contingency, either the Greeks take it or they leave it, then what would happen? We will think in terms of potential market turmoil. We would think in terms of, will that mean that the Greeks would now be forced to leave the EU, okay, to come up with their own currency again, to try to steer their economy towards growth by devaluing their local currency, by having a devalued drachma. And if they go that route, what would happen? Technically, the Greek economy is only 1.7% of the Eurozone economy. So the figure is small, but it could pave the way for other countries to say, enough with this. We don't want austerity. Remember that although a lot of us, although the focus right now is on the Greeks, there are other economies in the Eurozone around the Mediterranean area that also has problems. So if I were, say, from Spain, and I just heard that the Greek government decided not to do austerity anymore, the Greek government decided to leave the Eurozone, and I'm seeing my government press on with austerity, I might actually ask, why the austerity? Okay? Why not go the Greek route? Leave the Eurozone. Obviously, this hasn't been working for us all that great. Let's leave. Let's have a flexible currency. Let's have something that we can devalue. And basically, if no funding is provided, that opens the floodgates of that story. So to me, it's a damned if you do, damned if you don't situation. Risk would call for the weakness. Now, how do we trade this kind of story? Okay, how do we trade this kind of event? Well, you know my bias. I want to be short. One rule is that when you're trading a fundi like this, you don't want to commit yourself wholly at a single price. So say I wanted to sell euro. I really believe that there will be no resolution. How do I do that? Well, instead of my usual, say my usual trade is one lot. Instead of my usual one lot, I might decide, okay, you know what, this is a very iffy situation, things could develop, so I would probably want to scale myself into a trade. Maybe I will jump in now since the prices are still decent. But I'd be willing to jump in again from a better vantage point. I'd be willing to come in and short the euro from something like your R1 at 1258, or maybe just from the day's highs at 1189. So to me, what we will be presented with over the next, I guess I have to say over the next hour, would probably be argument that calls for a weaker euro. Now, if you're going to tell me, then why the heck did that euro rally yesterday? Okay, why the big rally yesterday? As far as I knew, as far as I heard, yesterday's rally was really a bit of rumor that was exaggerated. People were thinking the solution was in, which eventually proved that to be not to be the case. And I look at my chart and I would argue, well, you know what? You have a big important event, and you saw your euro selling off the prior 3 weeks. So when you have a market that was overextended, then there were people who just decided, okay, I don't want to risk having a short in euro while we have that big event happening. So people got out of the market, Thus, part of your rally yesterday, part of your spike up yesterday, was also people liquidating positions, getting out of losing cells. So, again, folks, going into your ECB meeting, uh, our bias really just calls for further weakness. If you want to put some technicals on how you trade it, you can use a break of your daily pivot. I see we have the daily pivot for Euro at 1087. I could use a push below 1087 as an entry. Take the sell side then. After all, there's plenty of room to maneuver. So options are you can jump in now, scale into the trade, jump in later at the break of your pivot at 1087. The one thing that really I'm not willing to do is to pull the trigger on a new buy in your euro. We just can't find the justification to do so. All right, but enough with the euro, guys. Any question in general or any specific chart that you'd like us to look into? Of course, when you have a Fundi event, it's a good idea to remember that things like indicators, your stochastics, your RSIs, they're not all that effective when you have a Fundi that's driving the market. Okay, let me just all right, we're supposed to be talking about ECB and Euro, but I'm fine with taking a quick peek at your dollar CAD. So big sell-off yesterday. Bearish close as well, but we seem to be bouncing. Average change of 127. We've had 76 pips. Let me go profile. You know, I'm looking at your dollar CAD and I'm thinking you really have a nice case for going long in the medium run. If I were to see this pulling back to 21-day EMA 2300, I would view that 2308 area as a possible buy-off point. So I look at dollar CAD, and to me, it looks vulnerable. Immediate view calls for a pullback, but so again, immediate bias for dollar CAD would be for weakness. I would certainly love to use a push below pivot, 24th potential entry. In the long run, I want to pick it up. In the long run, give me a nice price. Give me the 21-day EMA at 23. All right, let me get back to overview. We're about 5 minutes away from our decision, or rather from the ECB's decision. But as we said, we don't really expect them to Still 5 minutes, folks. Let me take a quick look at where shall we go? So what do I have in EUR GBP? Is it worth the bother? Can I trade it? Average range of 78, a bit tight. Of course, a pip is worth about $15. So that would suggest that range should be about, sorry, about a little tighter. So what do we have for Euro Pound? We've actually rallied in Euro Pound, folks, over the last several days. That rally, courtesy of perceived weakness for your GU. Here's the interesting part. If I were to drag fibs, I'm seeing not quite 78.6 fib retracement. I'm seeing pivot at 72.49, which was tested earlier, but did not give way. And my thinking is, well, we get there, and we open the risk of a 72.49 push. Do I see Euro and falling against Kiwi and Aussie? Well, those are very interesting choices. Let's take a look at your Kiwi first. Euro against Kiwi. You know, the way I look at it right now, Euro's really vulnerable across the world, across the board. I can't seem to find the contact for that. All right, guys. Unfortunately, I don't have a contact for EUR NZD. Let me see EUR AUD though. And what have we for EUR AUD? Dailies, you have signs of lost bullish momentum. Not quite a sign for a bear market. We broke below the pivot earlier. We tried pushing back up. We haven't been able to close above that pivot, above your 43.29 area. So I would expect that well, it looks vulnerable for eventually selling off. So I'm really more inclined on taking the sell side for it. Coming from right where we are. So I'd really focus on getting that thing rejected, easing down to 40 to 15. Guys, we're only 7 seconds away from our rate decision, but as we said, we really do not expect anything from this. This is all about what's going to be said during the press conference. Well, we have to wait for the press conference. As expected, nothing there, guys. 0.5, no PA. As we mentioned, the key thing for today is what will happen during the ECB press conference. Will the ECB say that they're prepared to provide some form of support just to make sure that Greece does not default on its obligations, on its loans? Oh, guys, there you go. Nothing's happening. Let me go across the board. So it's really all about the press conference. It's really all about whether Mario Draghi is willing to admit that preparations are being made. The problem there is if you tell someone, if you tell the bankers that you're preparing for something, it conveys a lot of negativity to it. Preparing something means that you do not trust that the Greeks will be able to pay. Preparing something means that Raha, I won't be around for the press conference, but yeah, you can listen to it online. Just go to the ECB's website and they're going to stream it. Let me give you the website. Here's the link, folks. There you go. You can view it from there. Okay. The thing is this. If the ECB provides money to Greece, for them to do that, they're going to have to violate some of their own rules. If I were, if I say I'm a billionaire, who wants to be a billionaire? Say you're a billionaire and you just heard that one of your banks, one of the banks that you place your money in, decided to violate some of its internal rules to accommodate another client. Would you trust that bank? Would you think, maybe I better move my money elsewhere? So, yeah, so my answer would be no as well. If the ECB decides to violate its own rules, just to accommodate, just to provide liquidity to Greece, if they decide to accept lower quality collateral, then I would expect people will dump the euro. People will be afraid about just about the quality of the assets that the ECB actually has. That's why the way I look at it, the ECB's choices are between a rock and a hard place. If they do extraordinary effort to provide liquidity to Greece, they lose trust. If there's no liquidity for Greece, then people will start thinking, oh, worst case scenario, Greece gets kicked out. If the Greeks get kicked out, would it be good? Maybe eventually, but it opens the way for potentially other members to move out of the EU. Say that you're a smaller EU member country and you feel that you're taking too much burden, you're taking more than your fair share, in terms of lending to other countries that have problems. And you start thinking, maybe I'm better off being alone. Or maybe you're another country that, like Greece, needs funding, is under some bailout program, just as Greece is under a bailout program. And you feel that austerity measures are just too tough. So if Greece were to leave the EU, then you can now point on that Greek action as precedent for that country to also say, we quit. We don't want to stay. Let us have our own currency. Let us depreciate our original currency. So, like I said, it's a damn if you do, damn if you don't situation. Although, really, the more interesting day perhaps would be on Friday, when you finally have that deadline for the Greeks to come up with money. So by Friday, it's not going to be talk anymore. By Friday, action has to be taken. What action? They have to pay. And then Friday, you also have your NFPs, with the US NFP picking up. So a combination of good US NFP and no cash for Greece would lead to, well, yeah, euro is strong for the moment. And I think part of that strength is people deciding to get out of selling positions. Remember, yesterday we had a rumor that there was resolution that a deal has been agreed to, which proved to be false. But that rumor was enough to trigger position squaring. The way I look at it, there's potential for a lot of action Friday. That's why I keep on saying Friday. The best case scenario is good things happening in the US, payrolls picking up, and then the Greeks would be unable to pay their debt. Imagine, we're talking only 320 million, and they're unable to come up with that. If that were to happen, I would think a big sell-off in euro would be forthcoming. Yesterday, it went up. Basically, that uptick in euro is more of people being caught flat-footed. They thought that there was an agreement, which turned out to be false. And we also had people deciding after a big sell-off, given the potential risk from all these announcements, let me get out. I wouldn't really call it that strong. There was I would say that part of that rally yesterday is about people getting out. Remember that if you were selling and you want to make sure that come Friday you still have money, you still have your profit, you get out of the market. Either you hedge it or you close your selling position. But the act of hedging, the act of closing means that you buy, which is which is one of the reasons why this move is overdone. After 2 weeks of sell-off and failure to see new lows for the week, people got tired of waiting. You have your sharp pullback. Raha, I agree with you. It was a big move, 270 pips. And those kinds of candles happen when people decide that maybe we ought to protect our profit. Just like this one big candle here. After a 2-week sell-off, market was unable to see a new low, unable to break below 104.60. So people got out rather than risk something happening policy-wise. So people got out yesterday rather than take a risk on what would happen with the NFP announcement. So that's how I view it. And that's, that's something that happens when you have a trend and all of a sudden you stop seeing new lows or stop seeing new highs. People decide, let me book profits. Let me put money in the bank, which is actually a good practice. If you're a trader and you see that the trend that you're in isn't really moving that much anymore, doesn't seem to have momentum, it's always a good idea to book profits to protect whatever money that you've already made. All right, guys. Well, we've really run out of time. So the key thing to remember is to watch the press conference. And what do you want to hear from the press conference? You want to hear from Draghi if he's preparing some contingency measures that will allow them to provide money to Greek banks despite the potential for a default on Friday. The only way for euro to rally is if the Greeks find money by themselves. They have money that's not going to come from their creditors. That's not going to come from Germany. That's not going to come from the EU. Maybe China. If the Chinese come in and give them money, then that's a different story. That's probably going to see your euro rally if someone else outside of the Eurozone provides the funding. All right, folks. Thanks for joining. And I will see you on my, I think, third week will be my next webinar.